Oh boy, guys, the markets are getting worse. It's currently about 2 p.m. on the East Coast. We have the Russell now down over 3%. The S&P, the Dow, and the NASDAQ, each of those are down about 2%, as we have the VIX up about 12% right now. And we got to break down the markets in this video. And I want to give a message to everybody out there investing right now. And this really pertains to everybody, but especially to the younger folks out there, especially to the younger folks. So sit back, relax. In this case, we got some water, so no coffee right now, but we got some water. Cheers, guys. Make sure to get your 15 stocks from Moo in my bio, and let's get into the video. So right now, again, the markets are not doing well. Russell's getting hit, big tech, the S&P, the Dow, you name it, everything is down, and the VIX is up, like I said, 12%. The VIX is now up over 30, and I know the VIX has had a lot of up days recently, but over 10% in a day, I haven't seen this in about maybe a week and a half on the VIX, so big volatility day overall today. And you know this, I've mentioned this in my videos time and time again, but based on the chart here, the 4-hour chart on the VIX, each time this thing has gone over 30, it hasn't really stopped there. You know, maybe once or twice it stopped at 30, 31, but most of the other times it's gone up to 35, 37. The VIX got to almost 39 back in the beginning of this year at the end of January. So VIX is moving up, and it's likely, it doesn't look like it's slowing down. Let's put it that way. It's likely the volatility to get worse. And now we have SPY. Let's pull this up. SPY is almost at the lows from a couple months ago. We're about $4 away. Triple Q, same thing. I mean, we're pretty dang close. We're right there, about $5-6 away from the lows. Not even six, more like $5 away from the lows. And now officially, let's do a percentage count on how much the triple Q's down, the S&P, the Russell, the Dow from all-time highs here. So triple Q is down now officially 33.5%. And if we take that low out, we're going to be getting to the 35 to 40% drawdown territory. We have SPY down a little bit less than that. I mean, a good chunk less than that, to be honest. We're down, SPY's down about 23 to 24%, and we have the Russell. Let's pull that up and see here what this is down. It was at 2460 at all-time highs. Now it's at, what, 1670. It is down 33%. As the Dow Jones, let's see here, Dow Jones was at almost 37K. Now it's at 29. It's only down 20%. Well, only. I mean, that's a decent amount. And wait a second. With today's red day, Dow's down 2%. Dow is officially in a bear market. Officially, wait a second. Is this for the first time? I think, yeah, guys, because at the low from the middle of June, Dow is at 29.6. It wasn't in a bear market technically at that point. It was down 19.7%. It was really right on the cusp of a bear market. But now, look at this. The Dow actually just took the lows out from the middle of June today, right now, no joke, today, and it's officially now in a bear market. Let's see, did the Russell take the lows out? No, but it's pretty dang close, 30 points away. So overall, guys, we are not doing well at all today. And I think Goldman Sachs cut their S&P 500 price target at 3,600 by the end of the year. Of course, there's other banks that have it at like 4,000, 3,900. Who the heck knows what's going to happen? But I'm sure that ended up fueling the sell-off today. The fact that, again, they cut S&P's target, and currently the S&P's at 3675, so that means it might have a little bit more downside to go, according to Goldman Sachs at least. And this, the fact that it might have more downside to go, is a good thing for you. Yes, you watching. The message right now for all the investors out there watching is, guys, I know you've heard this a lot. I know you're probably tired of hearing this, but in bear markets, this is where wealth is built. And I'm not saying the bear market is over. Who knows when it's going to be over? I mean, this could just be the start. For all we know, SPY could be going down to, 250, 200. Look, it was at 218 back in March 2020 during that COVID crash. So I'm not trying to say, and say the obvious, like, oh, yeah, just buy when stocks are red. You got to really try and understand this, guys, because overall, when stocks go down, or when the S&P goes down 25%, a lot of stocks go down way more than that. Same with triple Q. When it goes down a certain amount, stocks go down way more than that. And that is where opportunities are. In the midst of the bear market, the craziness, everybody's focused so much on the short term. They're not looking 5-10 years out. And when I look at stocks, I always ask myself this question, right? And this is good to ask yourself, I guess, in life in general, but we're not going to get philosophical in this video, guys. But with stocks, you have to ask yourself, will this matter in 5 years? Will this matter in 10 years? For example, the Federal Reserve, what they're doing right now. I know I make a lot of videos and I make a ton of content on YouTube talking about the short term, breaking down charts, looking at news, earnings, things like that. That stuff is fun for the short term. It's great. We all love it, right? But will any of this stuff, sure, some of it will, but will most of it matter in 5 to 10 years, 15 years, 20 years, guys? Absolutely not. A lot of this stuff does not mean anything. Or, maybe it's meaningful right now in the moment and, you're going to make some decisions based off of it. But if you stick to the principles of investing in the stock market for the long term, and if you're a young person right now, now's the time. I'm serious. Now's the time. When everybody was pumping up stocks in 2020, everybody had the stimmy checks, everybody was just sitting home, locked down, bored, nothing to do. They were on all these apps buying stocks, and that was the time not to buy, funny enough, not to buy stocks. Sure, if you were trading, you got in, you got out, you made money, you timed the market, you did well, sure. It was a good time for you. But if you bought some of these stocks at the peak of the market, you're down a lot. You're holding the bag. And I've been open about it. I've lost a good amount of money. I've lost money from stocks I bought in 2020. But if you stick to the principles of investing in ETFs, S&P 500, blue chip companies, profitable companies, long term, you're going to be fine. You're not going to need to worry about the short-term fluctuations. But going back to what I was, trying to get at, a lot of people were buying stocks in 2020 into these bubbles, right? And now when these bubbles have popped, and forget about these unprofitable companies, they've come down a lot. But a lot of these blue chip stocks have now come down a lot. Companies like Google, that I freaking love Google, this company is down from $157 to now under $100. This is probably going to go to the mid to low 90s like that before we even know it. And people are just overlooking it. But in 2020, when everything was hot, when everything was fun and the sexy thing to do, everybody was buying stocks. But now, in the midst of this disaster that we're seeing, which will probably get worse, nobody wants to buy stocks. And trust me, we all YouTubers and everybody that's in the community, you don't have to be a YouTuber, but if you're in finance in general and you track the space, you're into stocks, this, that, the third, there's a lot less enthusiasm now than when there was 2 years ago, and a lot less people interested now than there was 2 years ago, right? And that's the crazy thing. That's what I'm trying to get to you guys. The message is, now is the time. I'm not telling you what to buy. Forget Alphabet. Forget Google. I'm not telling you what stocks to buy. All I'm saying is, now's the time. When there's red in the markets, you got to go look and hunt for those deals. You got to see, what stocks look good to you. And if you don't even want to do that, just buy an S&P 500 ETF. Just buy something that tracks the 500 largest companies in the U.S. and just continue dollar cost averaging. And look at this. VOO is the one that I own. This is an S&P 500 ETF. This is down about 25%, 24%. And I'm continuously dollar cost averaging into this. And sure, in the short term, there's going to be some pain. In fact, I have been losing money on all the VOO buys that I've made in the past couple of months because the markets have continued to come down. But I know next bull run, whenever that is, and especially in 10, 20 years, going back to what I said, will this matter in 10, 20 years? In my opinion, it won't. But I will thank myself. That's the thing. What matters, or what's the crazy news right now, it won't matter in 10, 20 years. But my buys right now, what I'm actively buying in the midst of this chaos, will matter in 10 to 20 years, right? And that's what I'm focused on. That's kind of where my mentality's at. And I guess that's a good spot to actually end off the video. That's a pretty good quote there. Coin it, guys. What matters, or what did I just say now? I don't even remember what I just said. But you guys heard it. Rewind it. What matters today won't matter in 10 years, but the buys you make today will matter. If that makes, or the crazy news right now, you gotta sift through it. In other words, right? You gotta sift through it and focus on the long term. So with that being said, That's it. I hope you all enjoyed the video. If you did, hit that like button, subscribe, let me know your thoughts in the comments. And if you want to support the channel and you get some free stocks, use those links down below. You get 15 stocks from Moomoo with a $100 deposit. Each of those could be up to $2,000, and you can get 12 stocks from Webull with any amount deposited. Link down below. And with that being said, cheers, guys. I will catch you in the next video. Peace out.